All right, welcome. It's the weekend video. Am I recording? Yes, I am. All right, it's Enda here. It's the weekend video, and I suppose you could say it's a pretty bumpy week, to be honest. But we do have some progress and some things to talk about. Um, for those of you who are members and you may still have trouble entering the site, would you please email me info@bullwaves.org and we'll get you sorted. But I think we're through all the troubles with the website now, thank God. And obviously, if there is still an issue with it, uh, please email me. Now I'm trying to carry a thing over here. Okay, probably should have done this beforehand, but anyway, I hope you're all well. This is bullwaves.org. I'm taking a look at the markets through the prism, let's say, of Elliott wave patterns, technical analysis in general. All right, I'm going to go through the main markets. I'm going to start with the dollar FX first, and then move on to and sundry after that. Okay, so euro dollar, you can see that we've had that nice spike rally, nice impulsive rally in wave 1 of 3, I think. So at the moment, I'm tracking a wave 2. I think we should fall to I think we should fall a little bit lower, more than that anyway. So far, we haven't achieved enough, I think, to the downside. Let's get a Fibonacci grid on that. And we'll see where we probably should hit. So we've only retraced about 38% on the initial decline, and we've bounced again, probably retraced back about 50% of the initial decline. So I'm calling that an A and a B, and you'll see that in the lower wave chart, or the lower chart. It's 4-hour chart here. So that's wave A and B, and I think there's a wave C down coming. I'm looking towards that kind of between 107 and 108, in around there. We have 2 fourth waves, and I think we'll probably hit the low of wave 2 down around that area. So if we go to the daily chart again, you can see the 50% retracement in wave 2 comes in at, why won't you work? Comes in at 108.70. So between 108.70 and 108, let's say 107.70, somewhere around there, I think wave 2 will complete. At the moment this week, we've turned higher this week, but I think it's a rally in wave C of B. We haven't. Yesterday's action was interesting because it was an initial, let's say, hint that a reversal will come, but it seems that jumped too early on that one. We have retraced quite most of what we declined yesterday, and we're probably challenging the highs again. So I suspect we're going to see a new high in wave C of B today. 62% retracement comes in about 113.78, and if we hit that, then I think we should turn lower into wave 1. But for the moment, I think we're pretty close to the top of wave B. If wave C has to wait until next week and it's not going to start today, then so be it. I think next week we'll see a decline in wave C, and I think we'll probably hit that between 107 and 108 area to complete wave C of 2. Okay, let's move on. Cable has moved out to a new high. This is kind of it's interesting that we hit a new high, but I think we're hitting this new high in a B wave. So if you see on the 4-hour count here, you can see we've got a breakout above the previous wave 1 high, which came in at about 134.40. That completed 5 waves up. We had 3 waves down off that. I'm calling that wave A. And then we've had 3 waves up so far, and we've broken to a new high. So I'm still calling this wave B, but it's in the context of an expanded flat correction. So wave B will break out above the previous high, and wave C should come back down pretty hard, I think, and will at least break the wave A low. So at least break below 131, I think. But the previous fourth wave low at 127 is calling. It's in my head, and that would be a nice area to complete a full full-bodied retracement in wave two, get rid of any bullish sentiment that's in the market before turning higher into wave three again. So that's what I'll be looking for next week. It looks like we've got 3 waves up pretty much done at this point. I was thinking that the previous Wednesday's high was the top of wave C, but we've broken out this morning. It looks like the action over the last few days has traced out a triangle in wave 4 of C. So we've got a wave 1, 2, 3, triangle 4, and a pop to a new high in wave 5. So let's see if we get a reversal before the end of the day. If not, then it'll have to wait until Monday. Okay. So we go to, the daily count in dollar yen. We've come down quite hard this week again, which kind of it fits. It's more in favor with the idea that we had a correction last week. The decline has been pretty frustrating, to be quite honest. It's been less than impulsive. I can't really say that I've been over impressed by the nature of the decline this week. It's really choppy, really overlapping. It does look, I must admit, it looks more corrective than impulsive, but the decline has come so far now that I think we'll probably go all the way to the end here. Wave 5 will probably break 139.54 at the previous low. So you can see on the daily count, you have the wave A low there at I'm calling it 141, but I think the previous low lies at, let's go for count. Previous low for the pattern comes in at 139.54. So I think we'll break that. We'll make a new low in wave C of 2. And from there, then we will look higher. On the hourly count, you can see I've kind of been searching for a 5-wave pattern lower, but the market just doesn't want to give us it. The only way I could really describe what's happened off the top here has been a possible leading wedge in a way. But apart from that, there's very little impulsive action there. So I have been running with the idea last night that that might be wave A up to begin wave 2. Wave B has come down this morning and then possibly turn higher into wave C before the end of the day. That would be nice. A second wave retracement should give you more than just a blip in the chart. I mean, we should be talking a break above 145, possibly 145.50, somewhere around there. That would satisfy the needs of a second wave, I think. So we'll see how that plays out today. If we drift higher into a C wave, we could be talking about the top of wave 2 by tonight. We'll see how that goes. Okay, so this is the Dow, the daily count in the Dow. And this is what I've been harping on about in the last few weeks, trying to kind of quantify the height of a B wave. Usually, you would go between a 50% and 62%. That would be somewhere you would expect in a B wave correction. This one we've reached as high as a 78% retracement in wave B. I've probably explained by the rapid kind of acceleration lower into wave C of A. The market has kind of soaked that back up and retraced all of that decline in wave C, just by the fact that it was such a shock, I think, to the system. So even though it may have been expected, it was the market wide was not expecting it, and the kind of bullish, let's say, tendency that has kind of existed for the last few years just kind of took over, and let's say the underlying or what has proved to be conventional wisdom over the last few years has buy the dip. Always, whatever happens, buy the dip. That came in as strong as you would like over the last few months, over the last month, let's say. And with a bit of luck, this week we have topped that final wave B. Can't prove that yet, but yesterday's action is welcome, let's say that much. Now, we've done a couple of things. We've reached the previous 78.6, more or less reached the previous 78.6 retracement. We came in probably about 4 or 5% lower than that. We've double topped with the previous B wave high, the internal B wave high here. So we have basically retraced the previous C wave decline. So the usually you would say, a previous fourth wave at one lower degree would be a target for a correction, and a previous B wave at one lower degree would be a target for a correction. So we've got previous B wave, we've got this more or less the 78.6 retracement. You can see the market just pipped above the 200 MA and rejected it. So, question is, after a big decline, when the market pips above the previous 200 MA and rejects, what happens next? So you can see here, back in July 22, the summer 22, the market pipped above the previous 200 MA and rejected, and then went right back down to retrace to a new low. So, are we going to see the very same thing here? We've pipped above, not even very convincingly, previous the 200 MA and on the daily chart, and we have so far seen a rejection. Now you can see on the 4-hour count that the decline is not very much just yet. It is, reasonably impulsive looking. So we've got I think we've got a 5-wave pattern in here. Last night's kind of close of session was more or less flat. So the market was down for the day. We closed lower. On the 4-hour count, we have a break of the 50 MA after a clear 3-wave rally. So I think internally here you can probably, well, my best guess is that we've got an ending diagonal here, or a wedge pattern in wave C of B. You can see the way we've touched the previous B wave high and rejected. Excuse me, my voice is clouding up here as I'm speaking. And all of these kind of are points to note, basically. Maybe they're no more than that. Maybe this turns out to be just a blip in the wave C rally. But at this point, if we don't see a turn lower, I'm going to start to get worried about the larger pattern, to be honest. So, I would be questioning the idea that this is a B wave at all. So, from here is a real serious test. And I've said that before, but even off the previous highs, let's say if we go to the daily count, we had reached a kind of a test point here with a double top and a rejection at the double top. And I think I put out a video saying that this is a test as well. So the test proved positive on that one because we confirmed a decline, a serious decline, into wave A. And we were always going to get a bounce in a B wave. So no matter how, well, even though I was counting this as 5 waves down, but it turns out to be 3 waves down, it's fine. It doesn't change the overall perspective here. 3 waves up was always going to be a test of the larger scenario here. So if the market has topped, and if this is a B wave, then we have to collapse from here, basically. It has to accelerate lower. We have to break the zeitgeist into wave C. So I'm talking about, dare I say it, 10,000 points, somewhere down around there. We have, the next significant low for after the A wave low. So the A wave low would be the minimum target. So that'd be 36,400. The next significant low is the previous B wave. If that's a B wave, it could be charted differently, but the previous corrective low is down at 32,300. So wave C of A could take us down to 32,000. And there's no way in the world that the market survives that at this point because of the let's say the pervasiveness. Excuse me, I'm gonna get a drink. The pervasiveness of leverage here. And I can only imagine now at this point that the market is more levered than has ever been. And nobody expect. Well, at this point, I know for certain that the general populace, let's say across developed nations, the general populace has never been so invested in stock market as they are right now. The level of public ownership of stock has never been higher, and that is something, well, to commend and to decry at the same time, because we all know that when Joe Public buys in, it's not at a good time. So it'll still be proved, I'll be proved wrong or right on this one. If I'm wrong, it's back to the drawing board. If I'm right, I think, developed nations will have to go back to the drawing board on this one, and I might be sniggering on that, but it's not going to be a happy scenario here. Even wave C down is going to be a shock to the system. Even if we only hit the minimum target for wave C at 36,000, it's going to be a serious shock to the system. So we could, if we make it back down towards 32,000, that's a 10% drop. Sorry, that's a 25% drop in the market. That is a crash of epic proportions, and it's points wise, it's a crash that's rarely, if ever, happened before. Let's see, what was the top to bottom for the COVID crash? It was 29,500 to 18,500. So that was 10,000 points. So it's probably going to match the COVID crash. It may go higher as a percentage than the COVID crash. So, tread softly, because you tread on my dreams, as the poet once said. On the hourly account, you can see how I'm lining up here. Next week will tell us a lot, because if we track if we trace out a lower high today, if we track higher in an ABC, let's say something like this. If we track an ABC higher like that today, I think that would be alarm bells for next week, because we should head lower into wave 3 then come next week. And that's not going to be fun, but it will confirm to me that we're gearing up for something much bigger here. Okay, so for next week, for today, let's see if we can build a lower high. For next week, it's kind of George of the Jungle. Watch out below. Watch out for that tree. Okay, let's move on. Gold is singing again this week. I even saw in my local paper, local town, my local free newspaper in my town here, a big article on why gold is rallying so much, and that ought to tell you something. Okay, so we've had 3 waves down off the top. It looks like we're close to completing 3 waves up. So at this moment in time, I am looking at wave A in green is done, wave B is underway. So we could pull this forward. There's an argument to be made that wave B in green is close to done here, but I'm kind of giving it the benefit of the doubt here. We've already, like we have in this initial rally, we have retraced back towards 62% retracement. We're back above 50% here, and that is, you wouldn't expect a whole lot more than that in a B wave. So we're here already. So there is an argument to be made that we're close to completing that B wave already. So let's see if I can insert a alternate count there for a B wave top. Yeah, so we're close to a lower high, whether it's wave A of B or whether it's wave B done and we're heading down into wave C. That's the question from here. We could have wave A down, B done, B up done, and wave C coming our way. Previous fourth wave low is about 28,000, or sorry, 2,800 here. So wave C should fall into 2,800, I think, somewhere down around there. For the moment, let's see if we can top out wave A today. The possibility it's done already, but I'd like to see at least 3 waves down into wave A of B to confirm it. So let's see if that can happen today. So 3 waves down in wave A. Early next week, then we'll work on wave B and then wave C down. So if the current pattern is correct here, for the next foreseeable into the middle of next week at least, we'll be messing around with wave B here on working on a higher low here. And then after that, we'd look higher into wave C of B. For the moment, let's just track this wave B down with the one eye on that alternate idea there. Okay, so crude oil has we did manage a new lower high today, or sorry, this week, and then completely rejected that lower high yesterday. So the 1-2 idea is still a possibility. The alternate count here is still a possibility. So I'll show you that alternate count. So we have an alternate idea for a larger wave 4, which would, just triangle. The alternate wave 4 would allow for another bounce, probably above 65, to complete a larger 3-wave pattern, and then we'd head down into wave 5. On the hourly count, you can see I'm pretty much going with the idea that we've topped wave 2 again, even though last week was a nice decline. I was pretty confident that was wave 1. It looks like we've had some sort of a triple combination here. Either wave A up, wave B down, and then wave A up in 3, wave B down, and then wave C up in 3. It's a complicated count, but we have rejected that high, this week's high, $64, pretty conclusively, and we're back down, near last week's lows again. So it's large enough of a decline to suggest that again we are looking at wave 1 here. If we get a correction higher towards $62 today, that will be enough to suggest that wave 2 is done, and then from there we'd look lower next week into wave 3. So you can see an ABC up in wave 2. Over the next day or so, that's probably what we should get anyway. Even into Monday, if we track correctively higher today, we should probably see a lower high in wave 2 by Monday evening, and then down into wave 3 the following, probably towards the middle of next week. Okay, so let's move on. Suffice to say that I think the kind of near-term future here is lower and probably for longer. If I'm correct here. Let's move on. S&P. Yeah, we retraced scarily high in the S&P. Maybe just because it's some more, new industry focus uh, instrument or market. Maybe because people are more more au fait with the S&P, um, more au fait with buying S&P futures or options. Um, I would say the Robinhood crowd are all over S&P options. So and end of day options. So the force of buying would probably drift towards that larger market. Plus the Nasdaq 100 as well. But we did find a three-wave decline in wave A off the all-time high, three-wave decline. And so far we've had a three-wave recovery to a lower high. So the market, the S&P has, broken through the 200 MA, as I spoke about in the Dow, broken through the 200 MA in a more convincing fashion, but then has fallen back towards it quite rapidly yesterday. You can see how overbought we are, on MACD here. We have topped and reversed on MACD, topped and reversed on RSI. Well, topped out probably on RSI, you could say, at a serious extreme, far higher than we have seen even throughout the previous rally. Like this lower high is registering extremes I don't think that we have possibly ever seen. Well, we could probably call it July 22, just like I said previously. The July 22 high was close, but not. No, it was close, but it wasn't on the same extent that we've seen this last few weeks. The buy-in to this lower high in wave B is just breathtaking. You can see that the volume has declined precipitously as this buy-in was happening. You can see the extent of the bullish kind of sentiment in the momentum here, and you can see now that we have topped and we are reversing in momentum. So volume down, price up. Next to you can only compare volume trading right now to the previous high. So we're right back down to thin volumes, and we shall see pretty soon if this is going to, challenge, or if this is going to turn into a C wave. Then now's the time to do it. You can see the action this week, while a decline is not convincing enough yet. To confirm that, I would like to see probably a break of the previous wave A level there, so above 500 again to break wave A. On the hourly count, reasonably impulsive, 5 waves down. We could probably track 5 waves down. Leading wedge maybe in wave 1, so wave 1, 2, 3, 4, and 5. Or this could be wave 1 still underway, and we're within a small corrective previous fourth wave. At the moment, I'm allowing this to be. I'm giving the market time to create a lower high in wave 2. If that comes today, then just like I said in the Dow, then next week. Excuse me. Next week we'll be talking about a more serious decline in wave 1 of 1. Or sorry, wave 3 of 1. Previous fourth wave lies at about 55.70. If we get there, that'll be pretty convincing. Especially if we get there in 5 waves, that'll be pretty convincing. That we've we have finally topped wave B and we're turning down into wave C. Like I said on the Dow, the initial target would be a break 4,800 for wave C, but we could be talking about something much more serious. We could be talking about 4,000 again before long. Previous B wave is about 4,100. So, it's nothing to sneeze at. Let's see how it goes. Next week, I think that's what I'll be looking for. Decline into wave 3 to let's say to break 40 or 5,700 to confirm that wave 1 is underway. And then we track 5 waves down into wave 1. Okay. On silver, I was joking with myself this week that silver just won't give me what I'm looking for. And I was ready to throw in the towel yesterday with a possible 1-2 scenario here, and then we reached a double top and a sharp reversal. So the idea of a 1-2 here, while it is extended and long and drawn out and really annoying, to be quite honest, we do still have the possibility of a 1-2 pattern. So we'll stay with that until proven wrong. The action yesterday saw a pretty significant decline. This could be the first move of the first wave to begin wave 3. So I'm looking for a break of that previous B wave low. So that's call that 3160. We break 3160 in an impulsive manner. I'll be happy to confirm that wave 3 is underway. And that is that. Okay, so head over to bullwaves.org, check out the membership area. The website is back in action again, so you're free to come and join. And we'll see all the members there tonight. And like I said, if you do have an issue with the login, just email me. We'll get you sorted. Okay. I always end the weekly presentations with a presentation of the good news of the Messiah. Prophesied to come came on what you would call the 4th day of creation, the 4,000th year, came as prophesied. Just go and read. Open your phone and read Isaiah 53 and tell me who that is. And that was written at about between 7 and 800 BC, so 750 BC, somewhere around there. Prophet Isaiah saw a coming Messiah, the one that would pay for the sins, the iniquities of the world, potentially. And I say potentially because it's a gift from God, not of your work. It's not something that you work for. It's a gift from God. Just like any good parent would gift good things to his children. He may want good behavior, but that gift is still a gift. And the gift of God is eternal life through Christ Jesus for all who call on the name. And so, as Paul said, all who call on the name of the Lord will be saved. The name of the Lord Jesus, that is. So believe that Jesus is God's Son. He died on the cross for you, rose on the 3rd day, defeating death, and walk out from under Adam, the father of death, Adam, the progenitor of failure, Adam, and walk under the Messiah, the light, the way, the truth, the life, the one who came, the one who's coming back again. All you got to do is look around. He did say in Matthew 24 that there will be wars and rumors of wars, famine, pestilence, earthquakes in various places. Just look around. And you could say, oh, there's been, ever since time immemorial, there's been war. Yeah, but it's going global now. And as with many people, I think we've actually started World War III. And it won't look like your granddad's war. It's going to look different. It's looking different already. It's got a longer lead time. There'll be more proxy wars fought, but the final battle will be the devastating one, and it won't be a long battle, it'll be a short one. And that's the problem. We have all the time in the world until we don't. We have every day of our life. We have so much life ahead of us until we don't. And I don't know whether I'll exist next week, in bodily form anyway. I may exist in heavenly form. In fact, I know I will. So I know where I'm going when I die. And it's not arrogance. It's because I have the Messiah to pay for my sins, and I'm a sinner. Believe me, you live with me long enough, you'll know. So that's all I'm asking you to do is, search the scriptures, search out these things. If you diligently search, God will reveal it to you. And that's everyone. From, people tend to kind of put a label on themselves as one religion or another. You're Sikh, you're Hindu, you're Muslim, you're Jewish, and that is me. I am that. These are the set preconditions, and that's what I am. Me? No, I don't have a religion. I have a relationship with God. God is my Father because I've accepted what He did for me. And it's open to everybody. You don't get to heaven through your religion because you'll still die in your sins. And if you're a sinful person, when you die, you will be separated from God. God will not have fellowship with sin. Cannot, will not. And that's why the Messiah was sent, to pay for those sins. So I would urge you to search out these matters. To ask and you shall receive. That's what Jesus said. Ask and you shall receive. Seek and you shall find. So if you're seeking, you will find. Seek in the scriptures, though. Don't seek in the, Bhagavad Gita or whatever you call that, or don't seek in the Quran. You're not going to find it there. And that's that. Okay, onwards and upwards. Until tonight, I'll see you on the website, or next week I'll see you on YouTube if I'm still here. God bless and Godspeed.